Imagine getting a paycheck from companies like Apple or Coca-Cola just for owning a tiny piece of them. No office, no boss, just money hitting your account while you sleep. That is the power of dividends. In this absolute beginner's guide, I'm breaking down exactly how it works. So, what exactly are dividends? Think of it this way. When a company makes a profit, it has a few choices. It can reinvest that money back into the business to grow, or it can share some of that profit with its shareholders. That shared profit is a dividend. It's the company's way of saying, thanks for being an investor. Let's use a simple pizza analogy. Imagine you and your friends chip in to buy a pizza restaurant. The restaurant does really well and makes a lot of money. At the end of the month, you all decide to take some of the profits and split them among yourselves. That's a dividend. The more slices of the pizza company you own, meaning the more shares you have, the bigger your piece of the profit. So why do companies pay dividends? It's a sign of a healthy, mature, and stable business. Companies that consistently pay dividends, like Johnson & Johnson or Procter & Gamble, are often well-established leaders in their industries. They're not just chasing rapid growth. They have reliable cash flow and want to reward their loyal investors. Paying a dividend shows confidence in their future earnings and financial stability. It makes their stock attractive to investors who are looking for a steady stream of income, not just a quick price jump. Now, how does this actually work for you, the investor? It's surprisingly straightforward. To receive a dividend, you just need to own shares of a dividend-paying company before a specific date, known as the ex-dividend date. If you own the stock before this date, you're on the list to get paid. The payment usually comes in the form of cash deposited directly into your brokerage account. The amount you get is calculated per share. So if a company declares a dividend of 25 cents per share, and you own 100 shares, you'll receive $25. It's that simple. But cash isn't the only way. Some companies offer a dividend reinvestment plan, or DRIP. This is a game changer for long-term investors. With a DRIP, instead of getting cash, your dividends are automatically used to buy more shares of the same company. This creates a powerful compounding effect. Your new shares will then earn their own dividends, which buy even more shares, and the cycle continues. It's like a snowball of wealth rolling downhill, getting bigger and bigger over time without you having to lift a finger. This is how many people build substantial wealth over the long term. It's important to remember that not all companies pay dividends. Younger, high-growth companies, especially in the tech sector, often prefer to reinvest all their profits back into the business to fuel expansion. Think of companies like Amazon in its early days. They chose to build more warehouses and develop new technologies instead of paying out cash to shareholders. There's nothing wrong with that strategy. It's just a different approach focused on capital appreciation, which is the stock price going up. Dividend investing is a strategy focused on generating regular income. So, how do you find these dividend-paying stocks? Most financial news websites and stock screeners on brokerage platforms have tools that let you filter for them. You can look for things like dividend yield, which is the annual dividend per share divided by the stock's price. A higher yield means more income for every dollar you invest. But be careful. A super high yield can sometimes be a red flag, signaling that the company might be in trouble and the dividend could be at risk of being cut. It's about finding a balance between a good yield and a strong, reliable company. Putting it all together, dividends are a portion of a company's profits paid out to shareholders. They are a hallmark of stable, profitable companies and can provide a steady stream of passive income. You can take this income as cash or reinvest it to compound your growth over time. It's a powerful and accessible strategy for anyone looking to start building wealth. If you found this breakdown helpful, hit that like button and subscribe. In my next video, I'll be showing you the top 5 dividend stocks to start your portfolio with. You don't want to miss it.